Hi, this is Bob Guest with the Bob Guest team at Keller Williams. I think you might find this little blog very interesting, and so stay tuned just for a minute. I'm going to talk about what's going to happen with the market in the next few years. But please take note below. I have a home search that's very accurate. We've got a new KW application, Keller Williams application, that's very good at finding houses on your smart devices, iPads, etc., smartphones. And if you want to know the value of your house, just click the link below for your home evaluation. Okay, so lots and lots of people are saying, hey, the market's been on a roll. We've had great appreciation over the last 3 years. And the last time the market really went down was in 2007, so we're due for a market correction. We don't know if that's going to happen. No one has a crystal ball. We really don't know. The market is not showing us any clear indications of a market downturn right now. In fact, it's just the opposite. Every time we see a little bit of a cycle down, inventory changes and it goes right back up. So we don't really see any strong indicator of a market going down right now. We are seeing inventory going down, which is causing things to sell, and sometimes we're seeing a little bit longer time on market, slightly, just a couple of days, and in some cases we're not getting as many multiple offers. That's kind of all that's happening. Also, it's happening, a lot of people that have priced their house ahead of the market, jumped the gun, went a little high, they're having to lower their price to get down to market where it's going to sell. In any event, houses sell at market value in every market, and great homes in every market sell. So, let's say the market does turn down. What does that mean? It may mean a lot less than you think. So, for example, I'm going to show you some charts below, but if you bought a house around the $150,000 mark 10 years ago, it still has gone up $100,000 in value over the last 10 years. But from 2007 to 2012, it stayed stable, didn't go up in value. All that $100,000 was earned before the Great Recession and after 2012. All right, let's jump up to a different price break. Let's say the $400,000 to $600,000 price break. What happened there? Well, those areas are usually the pretty good locations, not great locations, good locations, more on the outskirts of the outer fringes of Austin. Areas like Steiner Ranch, for example, or River Place. Those areas, they've gone up quite a bit, but during the Great Recession, they actually went down about 10%. They didn't stay stable, they went down. So, but in those areas, your value has gone up about $200,000, which is quite significant. $200,000 increase in value over 10 years for a house that's, right now the average value is $500,000. 10 years ago, they were selling in the high twos. So $200,000 increase over 10 years is pretty significant. But from 2007 to 2012, that area actually went down 10%. What about the great close-in locations? Let's talk about downtown Austin, Tarrytown, Clarksville, right along the river, Zucker Park area. What happened to those properties during the Great Recession? Well, they went down a little bit too, but not as much. More fluctuation. You'll see it in the chart. But a property in that area over the last 10 years has increased in value by over $400,000, almost doubling. So a $400,000 property is now worth $800,000. Wow. So basically the only time you could lose in Austin is if you sold during any time during the Great Recession. So what does all that mean? That means if we are toppy right now, which is what people are predicting, and the market does go down, all it means is you're going to have to hold your property for 4 or 5 years before it may go up again. That's all it means. So your strategy, if you're going to hold your property for 10 years, you're good. Market's going to keep going up probably for a long, long time. It'll always have a general upward trend. However, if you plan on holding for less than 4 to 5 years, you're taking a little bit of a risk. So what does all that mean? That means if you're a buyer right now and you plan to hold for 5 to 7 years, you're good. If you are a short-term buyer, may not be good. If you're a short-time investor, may not be good. It may not be time to flip a house right now. You might get caught. But if you are a long-term investor or a long-time buyer that's going to stay in your house or hold a house for more than 4 to 5 years, you're almost always good in every market. That should help you and help you understand what's going on. And again, although I keep reiterating this in all my blogs, what's happening in this market right now is many people are selling because they have equity. And all of the sellers that don't want to do anything to their house, they want to sell it as is, they're selling. So there are more opportunities in this market to buy than you might think. Even though the market is toppy, even though the market's at a high point, there's still great opportunities because now people are selling with their houses not in great condition. And that is where real opportunity is. If you can do the labor yourself, if you can put sweat equity in a house, if you can do some of the work or get it done inexpensively, you can buy a great investment in this market. That's how I look at it, and I think that's how you should look at it too. So take a look at those charts below. The conclusions are quite clear. It's really, even though the market is toppy, it's still a great time to buy if you're going to hold. The only ones that are going to get burnt are the people that are, if you think you're going to be relocated quickly, if you think you're going to be transferred out of the area, then you could lose if the market turns. But we still don't see any signs of that yet. We're watching like crazy. We're looking for signs, and we don't see it yet. I think these charts below will be very interesting to you. I think you'll enjoy it. And thanks for tuning in to my blog. I really appreciate it. Please do call me if you're looking to buy or sell. And if you know anyone that is looking to buy or sell, we always love the referrals. That's really how we make all of our money, by referral. It's just the way this business works. Statistically, year after year after year, 70% of my business comes from sphere of influence, a referral we call it. And the rest of it actually comes from, a great percentage of the rest of our market comes from just marketing the houses that we have to sell for our clients. We get other buyers from that, and that's where the vast majority of the rest of our business comes from. So thank you again for referring us. Thank you for your business, and we do appreciate you. Have a great day.